Hello traders, good morning. This is Yanis. I'm welcoming you to this new series of presentations and webinars, which we will use 8 Forex pairs plus gold, so a total of 9 pairs, and we will keep those pairs throughout the weeks so that you can have a follow through and also create some kind of history that will benefit you, since you will be able to have a continuation on the same instruments that we were analyzing week after week after week. So without any further delay, allow me to start with the first currency pair that we are going to have a look at, which is the euro dollar. Here is the chart, the weekly chart of the euro dollar. Those of you who have watched previous presentations know all the history about how the euro dollar has moved for the past months. We are in a clear downtrend on the weekly channel. Obviously, the price, the pair is making lower highs and lower lows each and every time. Now we are in a rebound, and that rebound was justified, and we catched it, and we told you that that was probably going to happen, and the reason was because at that level around 112.50, the euro dollar was hitting a couple of major resistances in its way down, which obviously served as a support for that small retracement that we are looking at right now. And the first one was that level here around 112.40, okay? And of course, where I have that ellipse drawn, that's the 61 retracement from the low of March 20 till the high of January 21. If you draw your fibs on those, on that swing, you will see that not only did we have that very strong resistance on the way down, but also we had that support of the 618 fib. And we know that price were going to react to that retracement here. So now the question for the euro dollar is this: will that be just a retracement until the pair continues its move down? Or is it the start of a potential uptrend, in which case that would be the low, the maximum low that we have seen, or that we should see. And then we should see the pair moving up, moving back down again before continuing up. But all that needs to be validated by the market structure, which is, if this is indeed the lower low at that moment, that is our current high, then we need to see a higher low compared to this one, and then a higher high, which means the pair closing up above those highs to validate the start of a potential uptrend. How long would that uptrend stay in place? Nobody knows. Again, we will have to see and wait. We cannot predict the future. But if we are to draw the fibs for that downtrend, okay, you will see, sorry, I drew them in the wrong way. You would see then that we can expect a retracement up to the 0.618 or the 0.50, which would drive price around the 117, 118-ish areas before pushing further down. That would also mean that the pair was making, or will be making, lower highs and lower lows again. So that uptrend, for the moment, I'm looking at it. If price doesn't break down to that area of resistance, the 114, and continues further down, then it will break to the upside. Okay, so we have to wait. For me, the euro is not very clear this time. Even dropping down to the daily, allow me to remove the fibs. Okay, dropping down to the daily time frame. we are looking here at a range of about 50 pips, and this is why I draw the two horizontal lines, okay? And as you can see, the euro lately likes staying within those 50 pips a lot. Yes, it does break below and does break above. However, it still likes to be within those 15 pips area. Right now, what we have on the daily, we have a very strong close, which unfortunately couldn't manage to break above that 113.50 horizontal line and couldn't break above or close above the previous day bearish candle. So we are still within that small channel. But as you can see, we are kind of looking at that bullish market structure, slightly higher highs and slightly higher lows. So that's why my bias, if I had to trade the euro dollar upcoming week, would be long, but extremely careful, okay? I would need, dropping on the 4-hour time frame, which you know is our trading time frame, I would like to see the pair rebounding here on the moving averages and then pushing up to my target. So if I will have my eyes on the euro dollar, I am slightly favoring long positions right now, but I will need to wait to see price closing above that horizontal level or eventually below the lower line at 113, in which case obviously any long scenario would be not valid anymore. Okay, so if price stays here and maintains to rebound on those moving averages, which would serve as a great support before pushing further up, I would say that I would wait for an entry in the whereabouts of 113.50-ish, and I would have my stop loss here. My first target would be, if I'm a conservative trader, would be around here, which is about 1.3 win to risk to reward ratio. But if that long materializes, I would kind of expect the euro to try and retest the previous highs, and that will give me an excellent trade above 2 as a risk to reward ratio. So with a lot of caution and waiting for price to confirm that scenario, that would be my bias and my trade for upcoming week on the euro. Now, moving down to the next pair that I would like us to have a look at is the pound dollar. The pound dollar is also on the weekly in a steep downtrend. Okay, the bulls tried last week. 2 weeks ago, we had a close above the 20 moving average on the weekly. The bulls managed to close above that small descending trend line here, but couldn't manage to break and to close above those previous lows here, or that extremely important resistance area around 138. And as you can see, last week we did have a very bearish close. Didn't close. I would like to see that the close was below the 20 moving average to assess my short bias. However, still the pair is in a downtrend. It's still making lower highs and lower lows each and every time. And being now at the top of that descending channel, I would expect it to come back down and retest quite a few things. The previous lows here, the 200 moving average, and the resistance area at 130.50, my descending trend line, and a lot of stuff where we know that price will react. Dropping down to the daily time frame, as you can see, we had a rejection here on the 200 moving average. Very nice rejection. That was one of the best trades I made last week, just because of that doji and that rejection just after that close. I was short and I'm still short that pair. Now we do have a close below the 20 also on the daily moving average, hence my bias going short. And dropping down to the 4-hour time frame, as you can see, despite some attempts from the bull to break and to keep price higher, right now we are trading south. So for me, a re-entry or a new entry would be for that pair, a short position, either waiting eventually a retest, but I would enter immediately here. And my target, knowing that price will react to the 200 moving average on the 4 hour, but if we drop again, if we move back up to the daily, you will see that the daily does provide a much better target. Okay, so if I was to enter here, then I would have my stop loss. Hold on, let me remove that and use that on the daily. It will be much better for you to see. Okay, so my entry would be here and my target would be in the whereabouts of 133.50, a bit higher than what I have it right now. And my stop loss for that trade would be just above the previous daily candle. So that will give me a risk to reward ratio around 3, which is excellent. But again, allow me to drop down to the 4 hour. Okay, I would be monitoring that that area here for the reasons that I explained, knowing that the 200 moving average can serve as an excellent support for the pound dollar on our trading time frame, which is the 4 hour. Okay, so moving up to the Aussie dollar, allow me to get back up to the weekly chart. The Aussie dollar is yet again another pair which is in a down spiral, in a short bias. The pair is making obviously lower highs each and every time, and also lower lows each and every time. And right now it's stuck somewhere between the 20 and the 200 moving average on the weekly time frame, but it's flirting again with that major support or resistance right now to its way down at 0.71-ish. So dropping down to the daily time frame, you will see that here we are trading below the 20 moving average, below the 200 moving average, and the pair didn't decisively manage to break above the previous high and couldn't sustain those levels around 0.73. And now it's trading lower and it's testing again the 0.7150 area for the Aussie dollar, which leads me to think that the next stop on its way down would be in the whereabouts of 0.70 to the next major resistance that it will encounter. So for those of you who want to trade that short or short bias, I would say that you can enter a short trade. Allow me to check that around here. Your target can be that descending trend line here, and your stop loss might be just above those highs, giving you risk to reward ratio of 1.8, close to 2, which is also excellent. But again, that's my personal bias. Okay, in case where price somehow manages to close on the 4 hour above the 200 and above the 20 moving average, obviously we are taking off that short immediately. We are covering it because in that case the 4 hour chart won't be giving us that bias south, but might instead provide the grounds for a new trade going north for a long position. As you can see here on the 4 hour, and this is why I'm kind of I have that awareness for the Aussie dollar. It's because we are making higher lows and we are making higher highs on the trading time frame. So that kind of goes against the general and the most important daily trend. But the truth is that the pair has started making up higher lows and higher highs. So I'm not sure at that point if the scenarios for short trades, despite the fact that on the 4 hour the pair is extremely bearish, will be able to materialize themselves. Don't forget that in the whereabouts of the 0.7150, we are here in a major area of support and resistance, depending on the direction the pair has taken. So we need to be very cautious here about the trades that we might take on the Aussie dollar. However, my personal bias for the moment remains short on the trading time frame. So it's a short-term short, if you prefer. And we do have our eyes on how price will behave at the beginning of the week. So getting back to the weekly time frame, as you can see here, very important, and I need to make that a big bigger. Okay, price is still finding support on the 200 moving average. Okay, we don't have any kind of close. Allow me to delete that one. We don't have any close below the 200 moving average. So we need to be cautious. Okay, you see on the weekly we do have a downtrend, lower highs, lower lows. However, on the daily we do have an uptrend, higher highs and higher lows. So we need to be very cautious, and this is why that area here is particularly important for any decisions you guys are going to make. Okay, because of the weekly, which still is in a downtrend, and some news that should hit the board upcoming week. Personally, again, I'm in favor of a short, or I'm favorizing a short bias for that pair, even on the 4 hour, my trading time frame. But again, keep your eyes on those levels here before engaging and committing for any kind of short trade. So the next pair that I would like us to have a look at is the Dollar Cad. The Dollar Cad is right now on the weekly, again, making higher highs and higher lows. We failed on the last high. We failed closing above those wicks. And, you know, I like when a candle closes and completely takes out. That's what I call the follow through. And as you can see, we do have one here, and a couple here, which basically rejected the 129 level for the Dollar Cad. However, the price retraced, hit previous supports, went through, broke below the 20 moving average, and now it seems to find support on that very important level 125 here, which also has served as a base previously. And as we still are making higher highs and higher lows, and we do have that ascending trend line, which isn't broken, for me, the direction and my personal bias for upcoming week for the Dollar Cad is bullish. And dropping down to the daily time frame, we can see how price has found an extremely important support on the 200 moving average, despite the fact that it retraced below the 20 moving average a couple of weeks ago. And as you can see, we do have some interesting pin bars or bottoming tail bars, okay, with large wicks on the bottom. And price didn't manage to close below the 200 moving average, couldn't break that ascending trend line and closed below, and seems to be finding support at the 125 price tag. And it did manage to close not even a peep, but just a few pipettes above those previous highs. So closing with a very, very bullish day last Friday is for me a good opportunity to long that pair again. And for those of you interested in that long, you can start here, have a very small loss, stop loss. I would say that I would take it around here. We are on the daily, so we can pinpoint that on the 4 hour in a few seconds. And my target would be that next resistance area to the upside, okay, which can give us a 1.5 risk to reward ratio trade to the upside. Dropping down to our trading time frame, let's try to see if we can pinpoint something better. Obviously we can't. This is where things should be placed. Okay, this is our entry. Sorry, this is our target. Keep your eyes on that level here, because by the time, and if that long materializes, that would be the price around 127, let's say, where that uptrend will meet both the 200 and that descending trend line that you can see. It's a small one. So that can create a major area of resistance. And for those of you who would be long from lower, you will already be in a very good long trade. Just keep your eyes on it to see if we can push further up to the initial target, or if price may rebound here, in which case you may want to either secure your position or even close it. Okay, so that's for the dollar CAD. Let's move down to the dollar yen. Very important pair as well. Allow me to start again on the weekly time frame. Okay, the weekly is extremely bullish, or was extremely bullish for over a year. And as you can see, we did have beautiful trends, support and resistance areas were respected, and that helped a lot of traders in their positions. However, now it seems that we do have a change in the direction. We are experiencing a very violent short couple of weeks, last weeks. Price hit that resistance here, and then we have a very extremely important statement by the bears here 2 weeks ago, where that weekly candle engulfed 2 weeks in a row. You see it closed below that week also. Then we had an attempt on the from the bulls to try and push price higher, which failed last week, giving us that pin bar or that topping tail, which is a clear indication that the downtrend will obviously be maintained for upcoming weeks. So that's one of the strong pairs for me to go short. Dropping down on the daily time frame, as you can see, we had reactions at support and resistance levels just as planned. The 20, the 114.50 area provided that resistance in the way up, and now it seems that we are continuing our downtrend, despite the fact that the pair managed on the daily to create higher highs. But it seems that now we are going to experience the retracement. Remember, we saw that the weekly was extremely bullish for over a year. So now one would expect a decent retracement in the whereabouts of the 50%, or if it's a more shallow retracement, around the 0.382 fib from that uptrend. So that's where I'm kind of expecting the dollar yen to be led, sorry. And that's the area I would reconsider the uptrend eventually, or the continuation of that downtrend that seems to be starting now. So allow me to delete the fib, and getting back down to the daily, I think we discussed about that. Keep your eyes on here, 113.50, 60 level. Okay, I would like to see price closing below to confirm, just to confirm that the downtrend is about to continue for upcoming week. We may have some slight range movement here, range bound movement, but I'm expecting the pair to drop. And the first stop would be the 111.80 resistance area on its way down. Dropping down to the 4-hour trading time frame, as you can see, we have broken below that ascending trend line. We are having some attempts from the bulls to regain control. None of them has succeeded so far. To each one of these attempts, we immediately have a very bearish reaction from the bears. And right now, we are testing that 113.50-ish area. And for me, it's an excellent level to open a short position. So if you want to follow this advice or this bias, let's say, I would suggest that this would be your entry. This somehow should be, allow me to move the entry a little lower. Okay, and maintain your stop loss somewhere here. So that gives a trade with a 2 risk to reward ratio, which is extremely interesting. And we do have a lot of space going further south if that downtrend and that down move materializes, which I'm guessing and I'm hoping it will. So that can be an excellent short trade for those of you who would agree with my analysis. Moving next, we are going to have a look at the Kiwi Yen. The Kiwi Yen, allow me again to go on the weekly time frame. Okay, the Kiwi Yen is also now in a downtrend, obviously in the weekly time frame. I'm kind of expecting it to get back down at least to the 200 and that level here around 72.50. Somehow they should meet somewhere here. So my bias for the Kiwi Yen for upcoming week remains bearish. Dropping down to the daily time frame, we can see that now the pair is trading below both moving averages, below the 20 and below the 200 moving average. It has closed below that ascending trend line. However, as you can see, I've drawn those lines here for that purpose. Both these horizontal lines are creating a small channel, again in the whereabouts of 50 pips. But this is a very important intraday resistance level. So despite the fact that my bias for the New Zealand yen or the Kiwi yen remains bearish, I'm still will be waiting to see a confirmation that I'm going to have a close below that area, going further down, a retest, going slightly up, and then a bearish candle, a significant bearish candle, which would validate the next move down. First target around 74.50, 72.50 for me would be the real target. Dropping down to the 4-hour time frame, these are those two key levels that I want to closely monitor. Anything above 76.70 for me would invalidate the shorts, and anything below 76.10 would invalidate the longs. So I will be waiting for that, okay? The scenarios that I'm looking at is a rebound here, breach of the 76.70 level, coming back down to retest it, and then pushing up. Okay, this would be my entry long if that scenario materializes, and if it does, that would give me a very good risk to reward ratio trade again onto the upside. I would keep that here, and my target would be somewhere here in the whereabouts of the previous highs and that round price 78. Okay, that's a very good risk to reward ratio again. So that's scenario number one. Now for scenario number two, if it does materialize and I'm seeing the close that I want below that level, coming back up to retest it and then entering short with a bearish candle, then I would be short from here, and my next target would be initially the 74.80 area, and my stop in that case would be immediately above that line here, which would give me again a good risk to reward ratio over 1.5, around 180, 185. Okay, but remember that the short scenario has also a very good second options, which would be a final target around 73. I would keep it around that round number. And in the same way, if I'm seeing the things that I want to see for a long trade, then my target would be actually in the whereabouts of the 79 area for that pair, which is somewhere here. And as you can see, as the week develops, we can be on for two excellent trades, no matter if we decide to go long or go short, depending on what price will show us and where price will guide us. But both trades can be excellent when it comes to their profit that they can provide. So keep your eyes on the Kiwi Yen as well. The next pair I would like us to have a look at is the Euro Yen. Like most pairs with the yen, we are in, let me switch to the weekly time frame. We are looking at the same scenario. We are coming from very big uptrends, and now the market structure seems to be switching around and showing us lower highs, lower lows. So that pair, the Euro Yen, for me on the weekly is clearly in a downtrend. Okay, dropping down to the daily time frame, we can see that the pair has created here a lower high, and I'm using that as a trend line, and the pair has also dropped and closed below that trend line that I drew here, and it's now flirting with the next ones. Okay, this one is the bigger one coming from the weekly time frame, and this is obviously here the 127.50, a key resistance area in on the way down for that pair. So for the Euro Yen, if we drop now down to the 4-hour time frame, we do have that market structure, which indicates that the pair is in a short movement, in a short direction, and this is why my bias is also short for the Euro Yen. However, you can see that it broke below that ascending trend line, came back up to retest it, and now it's still setting up for another short, which is my preferred type of entries. So for me right now, if you guys want to go short, then you would open a short here, and your target would be the next resistance area. The stop loss can be relatively close, a few pips above your previous high, and that gives you a very good risk to reward ratio above 230, and that's one of the reasons that I like the short on the Euro Yen pair for now. And again, like I'm always saying, and I won't stop saying that, you have to be aware of what the market does. So no matter if we do take a decision And if we do have a bias for a direction, we cannot get married to that decision or to that bias. That means that at any given time, we need to be able, with enough reasons, to invalidate a move. That happens to all the traders. It's not a matter of right or wrong. We can be right, but the market can also prove us wrong. And in that case, you cannot stay glued to a position which is a losing position. You need to cover up your butts as soon as possible. That doesn't mean that we enter long and then we close the long and we enter short and then we close the short and we enter long again because price is making hiccups. No, we don't do that. We base our analysis, and this is why we are doing those presentations and those webinars together. We are doing this analysis, this technical analysis, for you to try to understand a mindset, a different approach on how the markets work and move. And using that will serve for you as an excellent base of knowledge for your trading, and you will improve your trading on the mid and longer term. So you need to be aware that errors are allowed and mistakes are allowed and losing trades are allowed. That's part of our day-to-day routine. The question remains for you to be able to be consistently making more money out of your wins than you're losing out of your losses. Okay, that's a simple number of math. So don't be afraid to acknowledge that a technical analysis that sounds solid at the beginning of the week can change midweek. And it can change because the big players, the banks, the institutions, the funds are simply throwing money, or they can change because Russia can go into Chechnya, or because COVID has a new virus, or for whichever reasons we cannot know. Okay, so we are here to plan our trades, but we are also here to understand that the plan might not be good, or it might have been good but might now need to be changed. And that's how professional traders do react, and when they monitor their trades and their trading in general. Okay, so you keep your awareness. That's the bottom line of this message that I wanted to convey to you. Okay, so we are favoring the euro yen short right now, and this would be the entry, this would be the stop to be used on a 4-hour time frame. And for me, this would be the final target. Obviously, again, when you do have in between your entry and your targets some ascending trend lines, some key areas of resistance and support, then you need to be aware of those and keep your eyes on, because we know that these are areas where price will react. How much will it react? We never know. So we need to be with our eyes open and evaluate the conditions when they do happen. Pushing further down, our next pair, allow me to change to the weekly time frame. We are going to see the pound New Zealand. The pound New Zealand puzzled me a lot this week, and I'm going to explain to you why. The pair is obviously in an uptrend for a couple of months, or for a few months now. But generally speaking, I don't like those straight up moves. Whenever I see something that doesn't show anything red and that's so violent in its move up, if I had to measure that, it's something over 1,000 pips. Yeah. It puzzles me. And the reason why it puzzles me is because nothing moves in a straight line when it comes to trading. And despite the fact that it did close above that resistance, which now may and can serve as a support, and above all those previous highs here, extremely good move, very strong, very bullish, very statement. I don't really like it. for me, it's way too obvious that price is manipulated and moves in an uptrend. So when I do see that, and I don't see, that kind of move down, and then a decent retracement, and then another move down, and then again a retracement, which always can be a change of direction, as it did occur here, I'm always cautious, okay? So despite that fact, the pound New Zealand still remains extremely bullish, and because of that candle here, and because of the close above those previous highs and above that resistance, which now serves as a support area, if we drop down to the daily time frame, you will see that the pair did react here. It reacted to everything, and this is why I love those moving averages. The 200, it reacted on that ascending trend line. It reacted on the 20, okay? And everything provided just as they should, and just as one should have foreseen, provided either the resistance or the support that the currency needed to push further up. So, and as you can see here, the pair hit a very, very important level, because it's not only those previous highs, but it's a round number. It's 2, and 2 is really something very interesting when it comes to trading that pair. Okay, and as you can see, there was an immediate reaction down once the pair broke above the 2 mark, and then there was a reaction from the bulls. The bears tried to do something that they didn't really manage, and then the bulls managed to close above everything. However, again, this can very easily be a bull's trap, okay? Because of the analysis that I did, because of what I said, price closed above, price found the support it needed to close above the previous high, it closed above that. That will immediately bring a lot of buyers, okay? And that's what we call a bull's trap, because those buyers will be trapped as soon as the big portfolios decide that, okay, now I can sell at a much better price. And this is why those trade moves up always puzzle me and make me very uncertain about their meaning. And for the pound New Zealand, I won't suggest anything. Yes, the bias for the pair remains very bullish. However, and for the reasons that I explained previously, I'm preferring keeping my distances. Besides, not trading or staying on the sidelines for a pair or in general in Forex is also a trading decision. Do not think for a moment that going long or going short are the only options that you have. No. That doesn't work like that. You have a third option, always, and always keep it in mind. You can also stay on the sidelines. And trust me, it's a very important decision that you guys can make. So what would I do with that pair? And I'm only saying that to try and explain to you why and why I'm thinking in the way I do. Okay, so what I would do, I would wait for a retracement. And for me, that retracement should come up either to that ascending trend line or to the 200 moving average, and or why not here on a previous intraday support level. As you can see, the 196.50 is an excellent level where things price can find easily support. Okay, so for me to decide to go long, I wouldn't enter here in the middle of nowhere after the pair has run 1500 pips up. No, I would wait for a retracement and then I would go long, which would mean buying that pair at a very cheaper price than it is right now. So keep your eyes on that pair. We are going eventually to talk about it next week as well. And this is one of the good things that week after week we are going to explain and see how the pairs did. Why did they went into the direction we had as a bias? Why didn't they? Okay, which is excellent. And that will help you learn really the basics of trading. So keep your eyes on the pound New Zealand. Personally, I will never enter long right now. It's way too overextended. It's not like overextending, like overbought. It's more than that almost straight up line, especially on the weekly time frame, without any kind of retracement, of decent retracement. And like I said, I would love the pair to get back down to at least the 0.382 or the 0.5, and why not even the 0.618. Okay, all this would be very healthy for an uptrend. That's the way the uptrends or the downtrends in the opposite should materialize, not a straight line up. If you guys see a straight line up, then be cautious and be aware that things might not be as they look like. Okay, and last but not least, we are going to end up with gold. And as you can see, gold is moving up for the past years. Actually, as always, when COVID started and when the world has problems, gold is one of the commodities and one of the pairs that provide what we call a safe haven for big money. And now the pair is in a downtrend on the weekly. We are having lower highs, we are having lower lows. However, the pair has now created a symmetric triangle. Okay, so price can break out in either directions as it is right now, and that's probably the reason why we are in a range for the past months. Having said that, we still can see that area here, and this is why I made it slightly bigger than the other ones. The 1775 has always served as a major either support or resistance, depending on the way the pair was hitting that level. And right now it did react. As you can see, those candles here, let me make the chart a bit bigger. As you can see, those past few weeks, the pair reacted to that area. Yes, it broke below, it had a violent reaction with that pin bar, and then it starts making higher highs and higher lows on the weekly time frame for the past weeks. Okay, so that can lead us to have a more bullish bias for gold, which is my personal bias as well. And if we drop down now on the daily time frame, you will see that price is reacting. Okay, it's in a range actually. Yeah, it's making higher highs and higher lows, but they are not very clearly defined. And now it didn't manage to push further up. So for the past days, we are still in a market structure which is bullish, higher highs, higher lows. We did have that super reaction, and here price gathers some strength before starting pushing further up. So don't be frightened by those reactions, by those retracements. They are good to have. Okay, we have them each and every time price pushes higher. So this is why my bias right now for gold would be long for upcoming trading week. But if we drop down on the 4-hour time frame or trading time frame, you will see that we do have a slight problem, because hitting up that level, which is just simply new highs, we are reacting. So price is in a range bound, in a sideways movement right now. It seems to be gathering strength for me to push higher and to do have a close above. So that's what I'm looking at. And that would be my trade for upcoming week. I would enter long here at the opening. My short is a slight of a problem. It's here, and only to keep my risk to reward ratio, I would use a new target because I don't have any kind of reference in the back. I don't know if the monthly provides something. Yeah, we do have things above. So dropping down on the 4 hours, I would say that that would be for me, the previous high would be for me the target that I'm looking for the moment, which is slightly over a 1-to-1 trade. And both levels, both that resistance area and that support area needs to be monitored. If I had to choose, again, my bias for gold is long. That would be the one. Now, if I do have a close below the 20 moving average, then obviously my long would be invalid anymore, and I would be potentially looking for a short trade with an entry somewhere here. That would be my target, and that would be my stop loss for the short. So in both cases, the short provides me with a better risk to reward ratio in both scenarios. The short provides me 2.38, almost 2.4 as a risk to reward ratio. The long, in the opposite, provides me with almost a 1-to-1, 1.10, which is not bad for gold. Both trades can be very good. Again, I'm favoring the long only because the pair managed to create higher highs and higher lows and still maintains the grounds above the 20 moving average with the 4-hour close last week. However, I will be waiting to see if the opening confirms that scenario to enter long, or if I do have a bearish candle taking out my long pin bar here, then I would probably switch to the short trade scenario, which again will provide me with a better win to reward ratio. Okay, so that's it for our new series of presentations. We are going, like I said, to keep the 8 standard pairs that you saw today, plus the gold chart. In case that traders would prefer to replace one of the pairs, the majors will be kept no matter what, but if there's an interest for specific pairs, then we can eventually either add them or switch them as time moves on. But let's see how that first presentation will, what impact will it have with you guys. And I'm waiting for your feedback and your comments. Thank you very much for being with me. Wishing you an extremely good new trading week, and we'll be together next week. Thank you and take care.